Good morning, everybody, and welcome back to another episode of Financially Speaking. I'm Kaylee Berenson with Bushka Retirement Solutions and Bushka Wealth Management, and joining me today is our co-host Tony Shore and Ryan Connor, a fellow wealth advisor here at Bushka. Listeners, if at any point today you want more information on our topic, feel free to call us at 715-355-4445 or reach out to us on our website at retirewithbushka.com, where you can also catch up on previous radio or TV shows. You can also subscribe to the radio program on Apple Podcasts, Spotify, and Amazon Music, where you can get updates on new episodes that come out. In addition to that, feel free to check out our YouTube channel where we have uploaded all previous radio and TV episodes for you to view at your leisure. Now, during today's episode, we're going to be talking about annuities and taking a deep dive and highlighting their pros and cons, and the fact that while they might be an ideal fit for some financial strategies, for others, they may not be the right move. But before we get into today's important topic, let me introduce our co-host, Tony Shore, who has far more pros than cons.
Oh,
Tony, how are you
Kaylee,
doing today?
Kaylee, more pros than cons. I'll take it.
Uh-huh.
I'll take that. Hey, I'll take any compliment. That's for sure. Kaylee, great to be here with you. I love it when they bring on the A team to host the show. I know you rotate through some of your advisors there, but today we've got the A team.
Absolutely.
We've got you and Ryan, who Ryan disappeared on us for a moment. He'll be back hopefully. But I want to tell you, first of all, I've had a great week, and I've spent a lot of time once again with my family over the past week, which I love.
Good.
You know that. My 3 kids were all home. Now that they're grown and out of the house, it's so fun when they come back.
I bet.
Right.
Yes.
And you're a long way from that yet,
Got some
Kaylee,
time. Yep.
but I know how much you love your family and spending time with
Yes.
them too.
Yep.
But you also love talking to your clients and our listeners out there. So I encourage all our listeners and viewers to call in, ask for Kaylee or Ryan. They love to hear from you. I think that's fantastic. Ryan, I mentioned to Kaylee, well, you stepped away there for a moment, how great I'm doing this week. How have you been?
Good. Just everything is in preparation for baby number 2. So that's
Mhm.
coming shortly. So my entire life is just getting ready for that.
Wow, that's right. Is it an any moment situation, or are
Hopefully,
we a few
hopefully
weeks
2
away?
weeks. Hopefully 2
2
weeks.
weeks? Is
So
that the
Yep.
planned?
yeah, that is the plan. So we'll
Yeah.
see how things go. But that's
Well, I
the
love it
point in
because
time.
when people are expecting, I always laugh because they go, "We're having the baby in 3 weeks from
Sure.
today."
We'll
And
find out.
I go, "Oh, are you?" Because it reminds me of the phrase, "Man plans, God laughs." Right? Right? You never know how that goes, right, Kaylee?
Yep. In a perfect world.
Yeah, in a
Never
perfect world.
know.
But it's exciting. That's exciting for you. And
Mhm.
wow, yeah, that's all consuming, especially as
Yeah.
you get closer and closer. And is this your first?
Nope.
It's
This
number
is number
2.
2. So
Yeah, that's right.
get to be
Right.
even numbered now. So that's
Yeah, that's
scary in its
good.
own right.
Nice. Yeah.
No, 2 is fine. Going from 1 to 2 is, I don't think, is too bad. It wasn't too
Yes.
bad for us. But when you go from 2 to 3, that's when the problems arise. I have
Mhm.
3, and you have to switch from a man-on-man defense to a zone defense.
Yeah, you're
Going from
outnumbered.
You're outnumbered, and that is problematic. I'm just gonna say. Uh,
Absolutely.
yeah, Kaylee knows. So, Kaylee, how have you been?
I've been good. Good as well. So we just celebrated my son's 5th birthday on Monday.
Oh,
So that was great. He learned how to ride his bike without training wheels, and he's swimming without his floaties.
oh,
So
wow.
it's been a big
That
week.
Well, 5 is, I love that age. It's
Yes,
crazy. They're
it's
so
fun.
cute. I like to remember my kids when they were 5 rather than teens and 20s.
Right?
Much
They're
more
much
fun.
cuter then.
Yeah. Yeah. No, they're still great. They're still cute. So, we should probably jump into our topic for today. I've been sidetracking us, but annuities have come up on past shows,
Mhm.
and it seems like there are so many misconceptions about annuities. They've been kind of a hot topic in the financial news with all the market volatility and uncertainty out there. A lot of people are looking at annuities. So I think it's important to discuss the pros and cons of annuities today.
Absolutely.
Yeah, I think we can do that today and kind of base our discussion around a Kiplinger article titled Annuities, What They Are and How They Work. I think that'll have some useful information for us to go over that listeners will be able to take away. So, like you said, annuities are talked about a lot, but people aren't totally sure necessarily what they are or how they work. So here can be a simple way to think about it. An income annuity can be kind of like your own personal version of Social Security. So with Social Security, you pay into the system during your working years, and you get income from that later. And an annuity can work similarly, except instead of Uncle Sam, you're working with an insurance company in this regard. You can either pay in all at once, what will be called single premium, or over the course of time, which is going to be some sort of flexible recurring premium option. And then down the road, usually in retirement, that annuity pays you back in some sort of regular installment. Now, that income can last a set number of years or for the rest of your life, depending on what sort of option you choose. Some folks buy annuities directly, while others might have access to them through their workplace, especially if they're using some sort of employer retirement plan. One of the key things to know, though, is that annuities are not one size fits all. There are a bunch of different types of annuities out there, and there are, depending on your particular financial situation, different types of annuities that may or may not be appropriate at different times. But for people who are looking for income protection or a more conservative way to grow their savings, annuities can offer some security and predictability as part of a broader overall retirement strategy.
Well, and I think you make some great points there. It's important to understand this, and as you've noted on previous shows, if you're considering an annuity, make sure you consult with a financial services professional like yourselves before making any final decisions.
Absolutely. So let's walk through how annuities work in real life. At its core, an annuity is a contract with a life insurance company, and it's designed to turn your savings into a steady stream of income, usually during retirement. The idea is to help make sure that you don't outlive your money. You pay into it either all at once or over time, and in return, the insurance company pays you back on a regular schedule. Annuities aren't usually a fit for people in their early working years or for many people who need quick access to their cash. But that's because annuities are a long term tool, and the money that you put in typically isn't liquid. And it's not easy to take it out early because you could trigger penalties or fees. There are options like multi year guaranteed annuities or MIGAs, which work a lot like CDs, but they're offered by insurance companies. And terms are often 3, 5, or 7 years, so they're shorter commitments compared to some other annuity types.
Interesting. There are so many different types out there, and I know they've become more competitive with each other,
Mhm.
making it better for the consumer with some of these. But what does an actual annuity contract look like, Ryan?
Yeah, so an annuity contract generally is going to involve three parties: the insurance company, the annuitant, that's the person who's going to be funding the contract, and a beneficiary who will receive the payout if something happens to that annuitant. The annuitant is also the one responsible for any taxes once the contract begins to pay out income. In terms of funding, you can either make a simple lump sum payment or a one time payment, or you can go with a premium payment plan. And that could be fixed, it could be flexible. You have a lot of optionality there depending on the product type, where you decide how much, when to pay within particular limits. Most annuities also come with a free look period. It's usually 10 to 30 days. It does depend on what state you're in, what product you have, which that gives you a chance to change your mind and walk away with your initial payment. One of the key things to understand is that with annuities, you do give up some control. Other investments you can kind of tinker with constantly and change. With annuities, that money is committed to the contract until it matures. So it's really about knowing what you want your retirement income to look like and how that's going to fit into your larger overall strategy.
Well, sure. And what are the phases of an annuity that you are talking about here?
Well, first, there's the accumulation phase. And this is the period where you're putting money into the annuity, either all at once or over time. And during this phase, your investment grows tax deferred, which means that you won't pay taxes on the gains until you start to take the money out. Then comes the annuitization phase, and this is when the payout begins. Depending on your contract, that income could last for a set number of years or even the rest of your life. And most annuities also include what's called a surrender period or a window of time where you can't freely access the money without a fee. A lot of insurance companies do allow you to withdraw up to 10% of your account value each year, though, without penalty. But going beyond that, even after the surrender period ends, you could still see fees or tax consequences depending on the timing. And like with any long term tool, it's important to know how the moving parts work. The goal isn't just growth, it's making sure that the structure fits with your overall plan and your timeline for needing that income.
Yeah, that's a good point. And, again, you need a plan and don't make a move without talking to a financial services professional, a fiduciary who's going to look at the big picture and look out for your best interests. And so, if our listeners want to get a hold of you to ask questions about this, you and the team there, Kaylee, how can they do that and set up a no charge, no obligation consultation?
Well, they can visit us at our website, retirewithbushka.com, or they can give our office a call at 715-355-4445.
All right, that sounds great. Well, today's show has been about annuities, and you guys have given us some key basics. What's next?
Yeah, so the article we mentioned earlier, Annuities, What They Are and How They Work, has a lot more info that I think will be useful to discuss today, and it'll give an excellent breakdown into the main different types of annuities. So let's break down some of the different types and how they actually work. So annuities are going to generally come with two options, immediate and deferred. And the difference between those two is all about timing. So with an immediate annuity, you start getting payments right away, typically going to be within the first year. These are often used by people who receive a large sum of money all at once. Could be from a settlement, an inheritance, or perhaps even a lottery win. And they want to turn that big lump sum into steady income over the course of time. Those payment structures can be monthly, quarterly, or whatever schedule the contract allows. Deferred annuities, on the other hand, are built more for the longer term. You put your money in, it grows tax deferred until you're ready to turn on that income switch, which could be just a few years down the road, or it might be decades down the road. And you can choose the start date based upon your specific retirement goals. Now, from there, you've got different styles of annuities depending on how you want your money to grow and how much risk you're ultimately comfortable taking with those dollars. So fixed annuities are going to come with a guaranteed interest rate. They're steady, predictable, and those may be ideal for folks who want a quite low risk but a consistent level of growth. And while they are technically deferred annuities, the timing of payout is sometimes flexible on those, so you may be able to start receiving income even within the first year. So, aside from fixed annuities, there are also variable annuities. Now, these offer more investment options, and the value of your payments are going to depend entirely on how those specific investments perform. There is more potential upside, but there's also more risk because you are directly exposed to the ups and downs of the market. Now, another option for those are going to be indexed annuities. So that's going to tie your growth to a market index, for example, like the S&P 500, but it does offer a level of downside protection. We kind of consider those to be the middle ground between fixed annuities and variable annuities. So whether you're looking for something stable, something with a higher level of growth potential, or kind of a middle ground for both, annuities can offer a wide variety of structures. It's key, though, that you understand how they work and how it's going to fit into an overall coherent strategy for your retirement.
Well, Kaylee, what can you tell us about secondary annuities?
Well, there are other types of annuities that might come up in a retirement conversation, and it's helpful if you know what they are. First, there's the equity indexed annuity, which is kind of a hybrid between fixed and variable annuities. It offers a guaranteed minimum payment, but it also has the potential to grow if the market performs well. It offers you downside protection plus a little room for the upside. Then there's something called a longevity annuity. This is a tool designed specifically to manage what's called longevity risk, or the possibility of outliving your savings. With a longevity annuity, you don't start receiving income until later in life, sometimes around age 80. But once those payments begin, they're guaranteed for the rest of your life. And the trade off is that if you pass away before those payments start, the remaining funds don't go back to your heirs. So it's definitely a strategy we're thinking through with a financial services professional.
All right. Yeah, for sure. And again, don't do any of this without talking to a professional to make sure it fits your personal needs and goals. And in addition to only purchasing an annuity in partnership with someone like yourself, what are some things a person should look for in an annuity provider, Ryan? What do you look for when you feel it's the right tool to help your clients?
Yeah, if someone's considering an annuity, if it's going to fit within their plan, one of the most important things you'll want to look at is who you're buying that from. Because unlike bank accounts, annuities aren't backed by FDIC or NCUA. They're going to be issued by insurance companies, which means their ability to make good on those future payments is tied to their financial strength. Every state, plus Washington, D.C., and Puerto Rico, has an insurance guarantee association. These groups will step in to help protect policyholders if an insurance company can't meet its obligations. But still, you want to do your homework up front. So hopefully, you don't have to even fall into that situation in the first place. And so this is going to mean checking some key things like how long has an insurance company been around, reviewing its balance sheet, assets, liabilities, capital surplus, kind of that, relatively boring business finance stuff that you want to go over. One way to do this that is kind of easier for folks rather than sifting through everything is to sometimes look at the ratings that are given. Whether that's AM Best, Moody's, Standard & Poor's, they can kind of give you a nice snapshot of the overall company's financial health. If you're looking for like a multi-year guaranteed annuity, the article recommends aiming for that AM Best rating of B double plus or higher. And if you're looking for an annuity that guarantees you lifetime income, something kind of along the lines of a pension, might want a rating more like A minus or better to feel comfortable in that long-term promise, because that's going to be the type of product that you're going to have potentially for decades. So picking an annuity is more than just about the features, the bells and whistles that are on there. It's also about making sure that the company behind it can keep its word.
Right. And we have just a little bit more time remaining in this segment. What can you tell us about the rules and regulations that govern annuities, Kaylee?
Absolutely. So, both the Securities and Exchange Commission and the Financial Industry Regulatory Authority regulates annuities. If somebody is selling annuities, they need to have the proper licenses. So, for standard annuities, that means a life insurance license issued by their state. And if they're selling variable annuities, they'll also need a securities license on top of that. In many cases, the brokers or advisors offering these products earn a commission based on the contract's value. So it's always worth asking how they're compensated and making you sure that you feel comfortable with the advice that you're getting. So you want to know who you're working with, what licenses they hold, and how they get paid, because a little transparency does go a long way.
Yeah, and that's what I love about Bushka. You guys are very transparent about everything,
Mhm.
and you don't try to put your clients all their eggs in one basket. You try to have a good balance of money that where the principal's protected. You still get some growth, but have principal protection and downside protection, as well as growth in the market. You're not just trying to sell insurance products. You're not just trying to do investments. You cover the gamut. Depends on what's going to fit the client's situation the best and help them the most. And I think that's what's really important here. So really quick, what's that number our listeners and viewers can call once again to set up that no charge, no obligation consultation?
Absolutely. So you can give us a call at 715-355-4445 or visit our website at retirewithbushka.com.
All right. Well, great show so far talking about annuities. One of the biggest stories in the financial news lately with all the baby boomers that have been retiring. We've got about 11,000 people a day turning 65, the most ever in our country's history entering retirement. And I know fixed index annuities are a popular vehicle for a lot of them. So let's continue. I mean, while annuities are right for some strategies, they're not right for all. What's next on the agenda?
Yeah, the article does a good job of laying out advantages and disadvantages of annuities that I think will be really useful for our listeners. So let's start with the potential advantages of utilizing. They do offer some unique benefits that make sense depending on your retirement goals. One of the biggest selling points in a lot of annuities is going to be guaranteed income. For a lot of people, annuities can help fill that income gap between Social Security and IRA withdrawals and kind of what they need for their standard of living, and can provide a steady stream of payments to fill that gap, potentially for as long as they live. Depending on the type of annuity you choose, you might get a lump sum, income paid monthly, quarterly, or annually. And with a fixed annuity, you might be able to lock in your interest rate, which can help you budget and plan with more confidence. Another benefit here is tax deferral. So you won't pay taxes on the annuity while it's growing, regardless of the tax type of it. So it's only going to be when you start taking income in retirement. Unlike with an IRA or a 401k, there's no annual contribution limit and there's no cap on how many annuities you can own. So that means if you want to pair a fixed annuity for stability with a variable annuity for market growth or an indexed annuity for kind of that middle ground, you can do all of those things. Some annuities also offer optional death benefits, which means you could leave something behind for your beneficiaries as well, whether that's through a lump sum or continued income payments for them. Just keep in mind that some of those optional death benefit features may come at an additional cost. So there may be a fee associated with those benefits on the product. The big key takeaway we want folks to take from this is these are just tools. These are just one part of an overall broader retirement picture. And it's important for folks to know what the particular one that they are looking at does, figuring out how that's going to fit into that bigger picture for them.
Well, and that brings us to maybe some of the cons. There are so many pros to some of these annuities, and I know different types of annuities do different things, and I think maybe annuities have gotten a bad name because of things like variable annuities, which, high fees, they do have risk, you can lose money, but they've become so competitive with other types like the fixed index annuity, where you have principal protection, downside guarantees. You can even get guaranteed income for life. And these guarantees are based on the income paying ability of the claims paying ability of the issuing insurance company, which is a good thing because you guys look at the top rated companies and work with the ones that have been around and have top ratings and are offering the best outcome for your clients. And I think that's a big positive, but there are always some cons, some things. Maybe it's not right for everybody. So, Kaylee, what are we looking at there? What are the trade-offs?
Well, like any financial tool, annuities do come with some trade offs, and it's important that you know what you're getting into. One of the biggest things to consider upfront is liquidity, or really the lack of it. So, when you buy an annuity, your money is typically locked up for a while, and most annuities do allow you to withdraw a portion of your money each year without penalty. But if you take more than that, or if you withdraw before age 59 and a half, you could face regular income taxes plus a 10% federal penalty. There are also fees to be aware of. So, some annuities come with charges like surrender fees, administration costs, or commissions. And if you've added on any optional benefits like riders, then those can sometimes come with a price tag that can eat into your returns if you're not careful. Another thing to consider is that not all annuities provide predictable growth. Variable annuities, for example, they are tied to the market. So while there's that opportunity for growth, there's also risk. And that means that your income stream in retirement could fluctuate depending on how those investments perform. So ultimately, it's not about steering away from annuities. It's about understanding the details, asking good questions, and making sure that the product fits your needs, your goals, and your comfort level. And that's what careful planning is all about.
Yeah, and that's what you help your clients with. So, Ryan, reflecting on what Kaylee just said and our whole conversation today, what's your biggest takeaway?
Yeah, I think there are a few of them. Annuities are going to be best suited for anyone who wants predictable retirement income. However, because you will be giving up a substantial amount of cash in return for guaranteed income, it's best to consider each type of annuity before making a decision on that. It's also important to look at the fees that a provider may charge, which might dilute the value of that investment. And the first place to start is to figure out what your goals and objectives are for retirement and for whatever chunk of money you're looking at putting into an annuity. If any of those things involve principal protection, guarantees, guaranteed income, if it might feel like something that you can't achieve with your current investment lineup, it may be time to explore annuities to fill that gap and help kind of balance out your overall investing strategy for retirement.
Yeah, and I think it's been a great conversation. There's a lot of confusing things being said about annuities, a lot of misunderstanding. So I wouldn't do anything without working with a trusted financial services professional. And we've talked a lot about the importance of working with a team like yours there at Bushka during the show. In the time we have left, Kaylee, can you explain how you can be important to this process and how you help your clients?
Yeah, absolutely. So, purchasing an annuity is going to be a major financial decision. And again, they may not always be the right move for everybody, but that's why working with a financial services professional can really make a big difference. They can help you understand if an annuity fits into your overall retirement plan. They can also highlight not just what an annuity does, but what they might mean for your income, your taxes, and your long term goals. They'll walk you through the different types of annuities, explain the fees, and help you weigh the pros and the cons. And because annuities can come with complex terms and optional riders, having somebody in your corner ensures that you're making an informed decision and not just reacting to a sales pitch. It's about clarity, strategy, and confidence in your next step.
Yeah, I think that's great. And I think that it can be a great tool. It's a way to create your own personal pension if you don't have
Mhm.
a pension,
Right.
a good addition to Social Security. And I find it funny how some people are wary of annuities, but they don't really, hey, Social Security and a pension, those are basically annuities. That's what it is.
Mhm.
You put in money and then you get a income from that in retirement. I think that's fantastic. Knowing that there's going to be money there, it's important for retirement income planning and maybe a good solution. But again, you have to work with a trusted fiduciary financial professionals like yourself. So once again, you're very generous in offering some no charge, no obligation consultations for our listeners and viewers out there. How can they reach you and the team there?
Well, listeners, you can give us a call at 715-355-4445 or visit our website at retirewithbushka.com. That's retire with BUSKA.com.
All right, sounds good. And listeners, that does it for today's episode of Financially Speaking with Kaylee Berenson and Ryan Connor.